The Southeast Valley is balanced right now, but it is heating up. Months of inventory, the number of homes available on the market is down over 28%. Let me share with you the big picture of what's going on in Southeast Valley, Arizona, and then dive into the details and share with you where the opportunity exists. My name is Scott Wynn. I'm with the Wynn & Egan team at Neo Home Loans, focusing on the mortgage side of things, with my partner Christy Kinney with K2 Homes at ProSmart Realty, providing the real estate data so we can dive into these numbers. Let's take a look. The Southeast Valley is currently experiencing a balanced market, but that is based off of all of these different metrics here that we take a look at. And with each metric, I rate them on the scale of either hot, cool, or balance. Currently, months of inventory is the mover in Southeast Valley, down 28.6% from last month, currently sitting at 2.5 months of inventory. We'll talk about what that means for you here in just a moment. Currently, homes are sitting on the market for about 80 days, definitely on the cool side. Sales per month in Southeast Valley as a whole is 1,344, also on the cool side in comparison to historical data. $440,000 in median sales price is also on the cooler side. Currently, sold to list ratio is at 97.8%, with sellers willing to pay closing costs, approximately $10,000. About half the sellers out there providing seller paid closing costs right now. Definitely, again, on the cool side, with mortgage rates up 0.5%, also keeping the market cool. So let's take all of this, dive into a little bit of these metrics and see what it means for you. So the first one is months of inventory. A balanced market is something where we see 4 to 6 months of inventory, and with currently sitting at 2.5 months of inventory down 1 full month from last month. Definitely the market mover, definitely indicating that we are getting into more of a hot market, and definitely still in a hot market considering we've been less than 4 months for quite some time here. Now, days on market are starting to level out, as I would expect, based off of lower inventory. Currently sitting at 79.8 months, up, yes, 79.8 days, up 3.9 days from last month, up 50 days from a year before. But with sales activity picking up, which is what we can see here, 1,344, up 296 sales from last month. So between market activity picking up, months of inventory going down, and days on market leveling out, I think we're starting to see a shift in the market. Median sales prices have leveled out, and I expect that these are going to start increasing as buyer demand returns. Currently sitting at $440,000, down $5,000 from the month before and $45,000 from a year ago. But again, I think we're going to start seeing that head up here soon. Sold to list ratio. Again, kind of going with the market trend. We're starting to see things heat up a little bit. This sold to list ratio definitely gives us an indication as to how willing sellers are to negotiate. What this means is that when a seller lists their home on the market, they're getting 97.8% of the original list price. And as that increases, that indicates that sellers are going to be less willing to negotiate. We're up 0.6% from the previous month, which is definitely pushing us more into a balanced market from this particular metric. This metric also gives us an idea of how willing sellers are to negotiate, because if they're willing to pay closing costs, that indicates that they are open to negotiations. 54% of sellers in the Southeast Valley provided seller-paid closing costs to buyers, with a median amount of $10,000. Now, that stayed level, and so has the amount or number of sellers providing seller-paid closing costs. But as the sold-to-list ratio heats up, as sales increase, as the days on market start to reduce, and as we see less inventory, all of those things are going to mean sellers are going to be less willing to negotiate. And we can expect the number of sellers and the amount of seller-paid closing costs to reduce, like we saw when it was much more competitive here. So what's going to create that? Well, I think it's going to be buyer demand, and that's going to be definitely driven by interest rates. Interest rates are up 0.5% over the last month, over almost 3% increase over the last year. But where do we think rates are headed? We think they're headed down. Here's why. Mortgage rates are closely tied to inflation. The Fed is doing everything they can to reduce inflation, and it's already started to work. As inflation reduces, we can expect mortgage rates to follow. And so by summer, I expect that rates are going to be quite a bit lower than where they are currently, which is going to bring buyers back into the market. With already reduced inventory for sale, that's definitely going to heat things up, drive prices up, reduce the amount sellers are going to be willing to negotiate. So as a buyer, how can you capitalize on this information? Well, here's where I think we have an opportunity is with these two metrics here. If you can take advantage of the market currently where sellers are willing to take lower prices and negotiate with seller paid closing costs, you have an opportunity where other buyers who are waiting on the sidelines for rates to drop will be able to take advantage of things now before they return. So why would you do that if rates are higher, right? Well, we have a certainty guarantee that's available to you to take advantage of this opportunity. So you can buy now with more negotiation power and then refinance for free. That's what our certainty guarantee provides, is the ability to refinance for free within 2 years after your home purchase transaction. So let us know if you'd like to learn more about how you can utilize that to benefit yourself to buy in this market. Now, we do cover the entire Southeast Valley, covering Chandler, Gilbert, Mesa, Tempe, and Queen Creek. We've got data on a zip code basis or per city basis. So if you'd like to take a look at that because you're considering a home sale, a home purchase, or just curious because you live in the market, please let us know. And of course, we would love the opportunity to meet with you in person if you're looking to buy, sell, or refinance so we can utilize this information and benefit you in the best way. Thanks for watching.